I got a new haircut, so I figured why not do a video? Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual, guys, this is not financial advice. Please do your own due diligence and research. What do I have for you guys? Well, I remember, let me start off by saying this. I remember when I used to talk about a company called Lemonade. It didn't get a lot of views, so I didn't keep talking about it. This is when it was like $6, $7 a share. Now it's 75. I remember when I talk about SoFi. How do I keep picking these winners? I did not go to school for finance. I am not a professional analyst. All I do is use basic common sense and critical thinking skills. Now, excuse me guys, I remember when I bought into NEO early on, the day they came on the stock market is the day I bought into NEO. It went up to like 60 something dollars. I sold at 61,000 shares and kept the rest. Of course, no one knew that Wall Street was going to short it and manipulate the market to where the stock is now. But I remember when I was talking about it in the $40 range, $50 range, people said to me, it's easy for you to talk about it because your average is $3.53 a share. Yes, because when I bought into NEO, it was $14 the day they came out. I caught it at $14 a share, but it kept going down and I kept buying and bringing my average all the way down. So then when it skyrocketed, and I kept talking about the company because just like SoFi Technologies, just like UXIN, just like Lemonade, just like Costco Shipping that I talked about recently, just like Suncar Retail Group, I look at the business model, I look at the CEO, I look at the product, I look at the delivery system, and I understand it just takes a little time. So as I kept talking about it, and they said, well, it's easy for you to talk about it, Money Making Mitch, because your average is $3.53 a share. But why didn't you buy at $3.53 a share, boy? You did not pull your pants up. You got excited at $40, $50, $60. And as the shares price tumbled and the company kept doing everything better and better, just like with Amazon at that time when Amazon tumbled from $105 to like $6 a share, the company was doing better, but the share price was not. And Jeff Bezos said, it doesn't matter. My company is improving on every metric. So now that the same thing happened yet again where NEO share price tumbled to $3 something, I kept buying for my son when a lot of people were saying, oh my God, I'm holding the bag. It's a bloodbath. Now, as NEO starts rising, which it's doing now, the share price along with the company's fundamental this time around, and I'm sure as I talk about the company when it hits $30, $40, $50, $60 a share and beyond, they're going to say it's easy for you to talk about it because your share price is $4.50. It's around that now. And my son averages $5.76 a share. They will say it's easy for you all to talk about it because you bought it at that price. And I'll say to them again, why didn't you, boy? Because you couldn't pull your pants up and be a man. So they get excited at the $30, $40, $50, $60 when NEO hits 80, 100, 200, 300, 400, 500. Well, you get my point. They're going to say it's easy for you to talk about it. Or that's when they say you got lucky. And I'll say, yes, and I only keep lucky people around me, so you better get away from me, boy. So for years, China's EV narrative has focused on three names, NEO, Li Auto, and Xpeng. But the latest data shows a decisive shift underway. NEO is entering the payoff phase, the harvesting phase, the reaping phase of its long-term strategy. Long-term, notice the word. Whilst Li Auto and Xpeng are losing momentum and strategic clarity. After a multi-year investment cycle in infrastructure, I always spoke about that, technology, vertical integration, the ecosystem, and brand awareness, NEO is now showing the early signs of operating leverage, sustainable growth, and expanding market share that the markets has been slow to recognize. Here is why NIO is positioned to outperform over the next 12 months and why rotating out of Li Auto and Xpeng and into NIO is becoming an increasingly compelling investment strategy. Compelling. NIO long-term strategy is now delivering results. Between 2018 and 2023, NIO made deliberate long-term investments, in battery swapping, whilst they said it was cash burn, and charging infrastructure, platform upgrades. We put the horse before the carriage. Vertical integration across core technology and premium brand development. These decisions temporarily weighed on margins and deliveries. Yes, it did, giving the shorts a chance to run and spread their propaganda narrative, which they always do. But 2024 and 2025 marks a clear inflection point. NIO has moved from volatile, product transition-driven performance to stable, scalable, and efficiency-based growth. Deliveries are increasing in a controlled and consistent manner. Rather than spiking and falling around model refresh cycles, this stability is critical because it reduces operational inefficiency, strengthens cost control, and drives the economies of scale required for profitability. NIO's model is no longer theoretical. The strategy is working. Li Auto's hybrid advantage has peaked. Li Auto's rapid rise was built on a temporary advantage. Extended range hybrids that category performed well while charging infrastructure was still maturing. Yes, charging and battery swapping was still maturing, so hybrids had its time. And everyone thought Li Auto was the stock to buy because that's the one Wall Street was pumping and telling you, forget about NIO, just buy Li Auto at $30 or whatever it was. But as China rapidly accelerates into a pure EV future, which will see about 80% penetration rate in the next decade to 90%, Li Auto's limitations are becoming clear. Its first pure EV launch failed because they took too long and they tried to rush it. The second did not create a meaningful turnaround, and some of them are going up in ball of fire like the Chupacabra. Delivery growth turned negative year over year in 2025. Li Auto is facing a strategic identity problem. It did not build a leadership position in pure EVs, only a transitional niche that is losing relevance as the market evolves. The company is now reacting, not leading. It's reacting. The hybrid honeymoon is over. Xpeng growth is quietly slowing. Xpeng still looks relatively stable if one only looks at total deliveries. But the year-over-year data tells a different story. Growth peaked in late 2024 and has slowed in every month of 2025. Momentum is fading at the exact time NIO's growth rate is accelerating. As they crumble, we rise. Xpeng is not collapsing, but it is losing place. In a highly competitive EV market, slowing momentum is often the first step toward market share decline, like you see with Tesla. Even though this grotesque form of capitalism that we have now in America has basically voted to give him $1 trillion, where his company is tanking year over year. NIO is expanding market share in a rapidly growing industry. China sold 11.2 million EVs in 2024, and the 2025 projection exceeds 15 million. This is massive expansion. But the key point is this: NIO is growing faster than the market itself. This means, yes, faster than the market itself. This means NIO is not simply benefiting from the EV industry tailwind, it is gaining market share that puts competitive pressure on not only Li Auto and Xpeng, but also on Tesla and BYD. Yes, you heard that right. In the premium EV segment, where NIO's brand strength and ownership ecosystem matters most. And more Chinese are waking up to battery swapping and understanding that their BYD, their Xpeng, their Li Auto is worthless after 8 years, and they still have range anxiety because they don't have battery swapping. The strategic turning point has arrived. We now have enough data to identify the long-term winner. NIO's model is entering the monetization and scaling phase. Li Auto and Xpeng has passed their peak momentum. The divergence between these companies is no longer subtle or cyclical, it is structural. There comes a point in every industry where the trend becomes clear before the final numbers show it. Though momentum has arrived for China's EV sector. Remember when they used to say, show us the numbers? Ha ha ha! Now I'm showing it to you, boy. For years, skeptics argued that NIO's model was too expensive, too complex, and too long-term to succeed, like Amazon. Those same long-term investments are now becoming NIO's competitive moat. Battery swapping, ecosystem loyalty, vertical tech integration, premium user experience. Premium user experience, the most important user experience. Is it a superior experience that will cause you to come back again and again and again? And brand strength are no longer costs, they are durable competitive advantages. The risk-reward equation has now shifted. Yes, the reward is higher than the risk when it comes to NIO now. NIO is now demonstrating accelerating growth, risking market share, and a path to profitable scale. Meanwhile, Li Auto's momentum has reversed and Xpeng is fading. The market has only just begun to reprice this shift. NIO is no longer a potential future leader, it is emerging as the clear long-term winner. So, from the very start, we saw this because we saw the business model, first of all. We saw the CEO. We saw the product. And we saw the way they're going to deliver the product. And we knew we had a winner from the beginning. So I hope you guys found this video yet again on a Saturday to be informational, inspirational, and motivational. If so, guys, don't forget to hit that thumbs up and hype it. It takes a lot of time to do these videos and the editing. And if you haven't yet subscribed, you might want to think about doing so, because in this channel, we are waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the games are played on Wall Street. And like 50 said, we get rich or we die trying, guys.